before you place your next trade, watch this. Markets are shifting fast, and today we're pulling back the curtain on how institutional money moves in volatile markets. So if you've ever wondered what the pros are doing behind the scenes, you would not want to miss this either. My name is Francois du Plessis. I'm your market analyst here at ATFX Africa. And today I am joined by a very special guest, Ruan Landsberg from Fortress Core Connect. He works directly with institutional players and brings incredible insights on how big money flows, especially in the uncertain environments we are currently seeing in the markets. Together, we are going to unpack strategy shifts, compliance trends, and what smart money really looks like on a chart, and how you as the retail trader can level up. Ruan, how are you doing today?
Perfect, man. Thanks for the opportunity. Obviously, it's an honor to be here. Doing really well. Obviously, still early starts of the week. NFP week obviously coming up as well. So I think we do have a lot to talk about. I think it's going to be an incredible trading week, to say the least.
Ruan, I couldn't agree more. Just in a little bit of a nutshell, can you tell us what you do at Fortress Core and what your company is all about?
Yeah, 100%. So we are a strategic partner of ATFX Connect, which is a prime of prime liquidity provider, ODP regulated as well. So at Fortress, we actually built pretty much anything in the tech space. So yes, we do offer through ATFX Connect, we do offer liquidity to brokers, institutional traders. As an institutional trader, if you are trading $1-2 million, why trade through a CFD broker when you can plug straight into the LP? So that's one key thing that we focus on. We are in the process of setting up a few CFD brokers across the world, in Africa specifically as well. And then we obviously have our prop firms that we set up, etc. So anything in the finance space, we can build it.
Absolutely fantastic. Thank you so much for that. Dive right into the markets here today. So right now, with all the volatility that we are currently seeing, especially around central bank speculations, US debt debates, and mixed inflation data, how are institutional players shifting their strategies currently from what you've been seeing?
Well, look, obviously we are in uncertain times. I think the COVID, we were in uncertain times, but it was more of a calculated uncertainty. I would say we obviously knew all what was happening. I think we're sitting in an economy where no one actually knows what the next step is, because we have Trump that's going across the board, shooting missiles. We have Iran. We have all these pressures. We have the trade deals coming up. So there's so much uncertainty in the specific market. And we can obviously see the dollar has been rallying to the downside the past couple of months. And that, once again, can be seen as a bubble, because if you look at the US economy, the economy is actually doing well. So that means that the pressure fundamentally pushing the dollar down doesn't have to say it has to do with what's happening in America. It can be because of the controversial side of Trump, most specifically, and not the currency. So I do believe we'll stabilize soon. I still think the economy is in a stable state. Obviously, inflation is through the roof in most places. Interest rates are high. But I do believe we'll start settling down first. I think we've all seen what happened when Trump took office previously as well. In the beginning, the first 3 to 6 months or the first 2 quarters, there's going to be instability. And the reason for that is he pushes new tariffs, he pushes new deals, etc. But if we look at the bigger picture of what he usually does, it's usually a stable market as a president.
Absolutely. And this all ties into positioning, of course. So another question here. So from your vantage point, what sectors or instruments do you think are currently affected the most by these macro conditions that you have just discussed, and why?
Well, I think it's mostly the safe havens, to be honest. If we look at gold, if we look at CHF Swiss franc is shooting through the roof. And we obviously know if something happens in the economy, people are pushing their money towards the safe havens. So gold was the backer. Everyone was backing gold for a long time. But I do believe now we're getting to a point where we are at a really high price, and that obviously scares the investors as well, like getting into the higher prices. And I think we can see it in the past 2 months as well. People have been moving their money significantly to the Swiss franc. But obviously for me, that's a big opportunity, because now you can obviously look, most institutional traders also look at USD JPY. which now comes into play because, if people are pushing their money to CHF JPY, that will lead to a decrease in the Japanese yen. And that obviously helps you out with USD JPY. Dollar is dropping, Japanese yen is increasing in strength, and that obviously leads to big sell-offs on the dollar versus the Japanese yen.
Super tight spreads. Yeah, tighter than your jeans after Christmas lunch. What if you could get this value today? Turns out you can. Join ATFX now and let's get you started.
That's very, very interesting to hear that from that end. And that was actually one of my questions that I wanted to state. And you already started elaborating on that. But I wanted to ask, do you feel that gold is losing its safe haven appeal and that institutional investors are moving their money elsewhere?
I think for a moment, yes, but I do believe it will come back to it. I think it also has a lot to do with Trump obviously being an advocate for crypto. I mean, we look at the crypto cycles and we can see that crypto is supposed to start with a pullback, if you have to put it in that way. But obviously crypto is booming and it's been booming for a long time. So I think because Trump is pro crypto, it's taking a lot of assets from gold to crypto. But I still do believe gold will always be the most trustworthy source for the institutional traders. I mean, we've seen the liquidity providers also to a point where they are overexposed on gold because most traders are still long on gold long term. I think we just got to a point where profit taking started taking place. All the institutional traders, obviously, we midway through the year. So I think also they want to have some dollars on the table for the hedge funds. So I do think profit taking took place, but I do believe sooner or later they will start reallocating some cash to gold.
Absolutely fantastic. Let's shift our focus a little bit onto sentiment. So at the moment, we're seeing Euro USD firmly above 1.17. Gold is around that 3,300 mark, and tech indices like Nasdaq 100 is just continuing to push up further. And I mean, even today, I was discussing how we saw Nvidia insiders selling over $1 billion in stock. So from your point of view, what is the current sentiment across markets right now? Are we risk on or are we risk off on this?
Well, I mean, if we look at the economy, like I said, I think the pressures in the market is coming from external factors, like Trump being sometimes a little bit too outspoken, so to say. So I still think it's a strong economy. I still think there's a lot of backing in the market. I think investors, I mean, this is something that I've had multiple conversations with you before as well. When people panic, it's the time to buy. When people buy, it's the time to panic. So it's always just the difference between institutional and retail. If we look at COVID, once again, COVID, all the retail was panicking. We saw everything dropping, but that's your biggest opportunity. Unstable economy leads to great opportunities within the market. And I think when everyone is looking at the news, looking at what's happening in the US, what's happening in Iran, what's happening in Israel, bigger institutional guys are making bigger moves than everyone is realizing. Like you said, Nasdaq, it's at a highs. USD is at highs. Everything is going to new highs. Well, everyone is still thinking that there's a bubble in the economy, where the bubble is not the economy. The bubble is external factors causing the market or the dollar index to go to the downside. But we also need to understand Trump is a businessman. Trump understands the economy. And that's one thing that you can never take away from him.
Absolutely. You mentioned something very interesting here, and you mentioned, institutional traders versus retail traders. So when you look at data, what do institutional traders focus on that most retail traders either tend to overlook or underutilize?
Well, I think a lot of times it's just a simple factor of getting scared out of the market. I think most traders obviously consume a lot of info. Because when you get into trading, you start going through that phase where you overcomplicate it. So you don't look at trading as trading. You have all these factors coming into play. And the biggest problem, I'll say once again, is all traders have social media. And trading doesn't happen on social media. I've always said that's where they create a panic. If a panic is created in the market, that pushes retail traders to get out of the market or to sell their coins or to drop whatever it is. And that's the panic the media wants you to create, because there's a supply and demand for everything. If a retailer is topside, the institutional can't be topside. So someone needs to buy the sells and sell the buys, you understand? So now what they're doing is they're pushing the narrative of, there's panic all across the world, so let's buy it from you. And then the institutional takes it to the top side. So I think it's just a mindset difference, to be 100% honest, where we need to look at what the market is telling us. Even taking out the economy, taking out all the fancy things, just look at what the market is giving us. The opportunities are there. The market is going to keep presenting opportunities. It's been presenting amazing opportunities the past 6 months, and I do believe we're going to continue throughout the year.
Zero commission on stocks? Yeah, nothing. What if you could get this value today? Turns out you can. Join ATFX now and let's get you started.
Absolutely fantastic. And I do agree with you on that. But let's shift a little bit and get a little bit more tactical here at the moment. A little bit earlier, we mentioned, smart money and positioning and so forth. And I know obviously there's a lot of trading strategies surrounding smart money concepts and so forth. Now, a lot of traders always ask, can we actually see smart money on charts? Can we really see the institutions moving on charts? What do you think?
Well, I think you can. I mean, as you know as well, I'm big on technical analysis. I'm big on analyzing the charts as is. And I think once again, if you look at it, it comes down to the simple concept. You need to find out where's the buyers and where's the sellers in the market. For me, trading has always been where's the buyers and where's the sellers. And if you look at pretty much anything, whether it be gold, whether it be currencies, whatever it is. I mean, if you look at dollar today as well, I mean, dollar is in a sideways market, which means it's accumulating to do something big. So for you as a trader, it's always about not trying to figure out or predict the market. Don't become a predictor, become a trader. So don't try and predict, is dollar going to break to its upside or to the downside? Wait for price to tell you where it's going to go. I mean, dollar index at the moment, if you look at that chart, it's a perfect example of institutions. They know the dollar is at the really low value. It shouldn't be trading at that specific value. And now you can see the buyers are coming in. And they're trying to push it back up. There's not enough buying pressures yet in the market. And that is us as a retail trader. We don't know who to bet on now. Do we bet on dollar index continuing with the bearish trend, or do we bet on enough buying power that will come through? Or do we just wait to see if there's enough buying power coming through or not enough selling power? So I think a lot of times it's just about seeing the moves in the market, sitting on your hands and waiting for the big boys to tell you this is what's going to happen in the market. And then you ride a wave with them rather than trying to create your wave with a smaller account. The institutional guys will always run the market. So wait for them to show you what's going to happen and then execute based on that.
Absolutely awesome. But now we're talking about technical charts and we're talking about technical analysis. And a lot of things nowadays is surrounding automation, algos, bots, etc., and how this is actually changing our landscape and how trading is changing. So, do you still see a place for a discretionary trader, especially institutional level, or have we passed that or have that phase currently in the market? And do you think that everything is just going to become automated and bots and so forth? Or is there still a place for that human interaction, that discretionary trader?
I think there's a bigger space for trading yourself than adding AI, to be 100% honest with you. It's a strong opinion that will always be there. I think you can automate a lot of processes, but at the end of the day, I've been trading for 10 years this year. Gone back to the 2005, 2008 market crash, I've seen all the patterns. If you look at the market, it's under change. I mean, we started trading Forex, or the chart started moving in a sense before there was TVs. Everything is still the same. So it's still the different patterns. I think the only thing that's changing is the volatility in the market. I mean, gold used to move 35 pips a day, where we're moving now like 6,000. It's a different time. But I still believe, just looking at the charts, I mean, for me, yes, I know there is a lot of AI that can help you, but I still believe for me, it's always the simple concept. Who controls the market? The market is controlled by the bigger guys. And if you know anything about institutional guys sitting there in the banks and stuff, these guys are old school. They don't care about AI. I'm probably sure you get that guy running $6 billion and he has no idea what ChatGPT is. Well, he knows, but he doesn't use it because these guys running the market are still very old school. So I think eventually there will come some change. But for now, I think the system will remain the same. The guys at the top are still using the same techniques they've been using for the past 20 years. Is it an outdated system? 100%, but we can't fight that system because that's a system that they created and what they learned through their phases.
Absolutely fantastic. Ruan, let's wrap things up. So if I had to ask you, what is the one piece of advice that you would give a serious retail trader right now? Someone who's putting in the work, and wants to stay competitive in a world increasingly dominated by institutions?
Well, I think it's quite simple. Just understand trading is, yes, it's the biggest market in the world, but the biggest market leads to the most difficult market. It's not easy to become a trader. It's not easy to become a profitable trader. I mean, I posted a reel today, and the reel is just about consistency. Consistently doing the same thing over and over again. Find what works for you. Don't try and make money from trading in the beginning. For the first 2 years, just focus. Even if you use a 1 cent lot size, and this is why I don't sell courses, because people, no one will buy a course if you say use a 1 cent. But if you just use a 1 cent lot size for the next 30 trades, same dollar value risk, same currency, same session, just do the same thing over and over again. And trading gets to a point where it's boring because you wake up, you know, you're trading gold between 12 to 4. This is your entry criteria. That is where you become a trader. When you have a pattern and you follow that pattern every single day. So create a pattern. What works for you? If you're a full-time employee, long-term trading. What are you long-term trading? Where are you waiting? What sessions are you entering? What currencies are you trading? So get what works for you, stick to it, and then just keep adjusting.
Absolutely fantastic. That was absolutely powerful. Thank you so much, Ruan, for your time. So traders, if you want to keep learning how the markets move and how to stay one step ahead, make sure you hit that subscribe button and check out our next video. And then that wraps up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa and experience the difference for yourself. Until next time, traders, stay sharp, stay focused, and trade smart.